We'll be looking at how we can use futures in the aftermarket in case you needed to hedge your portfolio. So let's be clear on what we are doing here. The futures market is obviously not for everyone. If you're a very active trader that has a lot of time to devote to looking at the markets, you can trade the futures because the futures are just like stocks and they are highly leveraged. We saw that for the S&P, one contract of the S&P futures, which has a notional value of about $100,000, we put up an initial margin of about $4,000. So it's leveraged about 20 times. And so what happens is the futures moves very rapidly. And so if, unless you can time your entries and exit properly, it's very difficult to play the futures market. Now, it's after hours now, and we can see that now the US market is closed. It's about 4 a.m. And you can see that even in the European market, you're seeing volume in the S&P futures. And not only that, you can see some elements of smart money also playing, because we can see that let's just put the contracts to more than 10, because anybody that puts more than 10 or 15 contracts is probably coming from an institutional fund or what we call smart money, which is hedge funds. And these are all people in Europe right now. So you can see that even now at 4 a.m. there is quite a bit of volume coming into the markets and into the futures market. So the futures market is very active, and what happens is many a time there is news events that breaks out around the world. So right now, as we speak, the Europe crisis is still going on and nothing is resolved yet. In fact, we had a G8 meeting over the weekend. There were some positive comments from all the leaders, but then that was a short-lived rally. And yesterday, the markets came under pressure in the end, towards the end of the day. And today, again, you can see the ES futures are down about 4.5 points. But you'll see that when there is a severe elements of crisis, then your ES futures, your S&P futures can be down up to 20, 25 points. So then the question is, if you have a portfolio and you're concerned that something bad is going on in the markets and that your portfolio is going to take a hit, then is there a way to hedge? Because if you're playing the stock market or the options market, basically your entire portfolio is tradable only between 9:30 a.m. and about 4 p.m. US Eastern Time. So what do you do for the rest of the time? And because for the balance 16 or 17 hours, the rest of the world markets are trading, where news keeps coming out, and then unfortunately for us in the US, we've been sort of shackled by what's coming out of Europe.